Artistic, good to see how you doing. How you been? Just trying to figure out to see if if the live show is sharing, which it isn't. Okay, so I gotta do this. I'm so sorry, everyone. Due to essentially Restream and the X problems that we're having, um, the only way to share the live show is like this. Essentially, from now on. Okay. Into your profile. Okay, there we go. So, everyone, I was able to post a live show on my profile because I know we haven't been able to do that for a while due to Restream and X having problems. So now everybody can retweet and like the live show because I've just posted on X. So, Artistic, good to see how you're doing. Mike, good to see you, brother, how you're doing. Scott, funky brother, good to see you as well, how you're doing. How's things? Scott, good to see you as well, how you doing. How's things? How you been, Miles? Have been doing good. Good to see you as well, Funky. Good evening, Miles, and all CMF. Hope everyone's had a good weekend. Let's go. How you doing, Addy? Hello, Miles. Great to see you back, brother. Let's go. T. Good to see you as well. Hi, Miles. How you doing? I'm doing great. Solomon, good to see you as well. How you doing? Evening, Miles. CMF. Jason, good to see you as well. How you doing, brother? Free and forever. Good to see you as well. How you doing? Evening. X seems fine. Let's go. Hi, Miles and everyone. One love. Good to see you as well. How you doing? Joe. Evening, Miles and CMF. How was your weekend? Weekend was great. Good to see you as well, Joe. How you doing? How was your weekend? Scott, let's go. Hello, Miles and CMF. Coming to us. Good to see you as well. How you doing? Share the live. Let's go, Scott. Okay, CMF members. Welcome to the CMF live show. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. And essentially, you can tune this live show Monday to Friday, 10 p.m. London time onwards. For the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is no financial advice, no political advice, and whatever I say is only for entertainment purposes. Now, CMF members, thank you so much to everybody who has already liked and retweeted the live show because I was able to fix the issue we were having where the live show wasn't being posted on X and everyone had to share it on their own profiles. Now you don't have to do that anymore. So, CMF members, if you have already liked and retweeted the live show, thank you so much on X. If you haven't, take 3 seconds, CMF members, to like and retweet the live show. It's on my profile now, just like it was all the time. If you're essentially watching us on YouTube and you like the live show as well, thank you so much. If you haven't, like on YouTube and leave a comment outside the live also. But I was able to fix it. So just like before, it's on my profile, the live show. Go and like, go and retweet it, put a comment outside the live as well. Now, on tonight's live, there's quite a bit of a mixture of news to go through. A lot of essentially some manipulation news to go through, some scandal news to go through, essentially for the crypto sector. And obviously, the bigger one that we're going to start off with is the Bitcoin situation for the crypto space. So, on tonight's live, we're going to cover some Bitcoin news. We're going to cover essentially some prediction news from Standard Chartered Bank. We're also going to essentially cover some news regarding essentially what's been happening in terms of the crypto space getting licensings to be able to rate, sort of crypto projects being able to operate as some sort of a essentially chartered bank. We're also going to talk about World Liberty Financial on tonight's live because that's become some sort of a sore subject, you could say right now. We're also going to go through news on tonight's live regarding Solana, which is a crypto project we haven't talked about in a while. We're also going to go obviously through some Ripple news as well, some international war geopolitical news as well with the Iran and US situation, which is still keeping the market space at limbo right now. You know, the crypto market space can't go up, and essentially every time it does go down, it's because of tech stocks, but it can't go up. And Bitcoin keeps on reaching a certain level where it's just like hitting a glass ceiling and it just cannot go higher. And it is mainly due to, you know, what Franklin Templeton or Nicholas from JP Morgan or so on. So many essentially high profile CEOs, CTOs, analysts from big essentially corporations. Every single one of them stated it's because we're hitting some sort of a glass ceiling. We don't know when this war between Iran, US, and Israel, or even possibly Russia and China getting involved, is going to kickstart. Because if it does, the market's going to do essentially a stage of shock and everything's going to go down. And within a few days, everything will be back up because Iran tends to use crypto as some sort of money laundering scheme. But that's why the crypto market space are essentially still at limbo. So we're going to talk about that for a little bit as well. But the first news we are going to be covering on tonight's live is regarding Bitcoin and once again tech stocks. So Bitcoin, famously known as digital gold, and the reality of it is it just follows tech stocks no matter what it does. So here is essentially what's happening inside the market space so far. The recent Bitcoin essentially rally has lost momentum as broader sell-offs in the software and private equity sectors continues to weigh in heavily on both traditional and digital markets. It seems like AI essentially tech stocks are going through some sort of a bubble scenario again. This downturn essentially has largely attributed to a sell-off sentiment among investors, essentially sparked by underwhelming earnings reports in technology sectors and growing concerns over high valuations in private markets. IBM also took a massive dump today, the stock about 11%. That didn't really help Bitcoin either. As liquidity tightens, the correction, essentially the correlation between stocks and cryptocurrencies has tightened even more, leading to a synchronized essentially declines across major asset classes. Bitcoin was always going to be known as the safe haven asset. When the market goes through turbulence, everybody should run to Bitcoin. Unfortunately, when the market goes through turbulence, Bitcoin is the first one to get hit. The pressure on Bitcoin is being amplified by broader, essentially, macroeconomic headwinds as well, essentially including persistent military tensions in the Middle East and legal setbacks for the current administration's trade policies. What's that referring to is, if anybody hasn't heard or you have seen it, basically, Trump's tariff policies by the high courts were overturned, which means essentially the US has to pay back all the tariff money, essentially. It's not going to be as easy as essentially the news puts it, where the US just starts giving refunds out to every nation they tariffed. That's just not going to be the case. It will take 5 years in courts before any penny reaches any of these corporations or any of these essentially jurisdictions outside the US. I personally think it was a stupid idea for essentially the Democratic Party to weaponize the court systems to go after Trump for bringing money back into the US. The Democrats hate essentially the United States of America so much that the idea that the US was making profits for the first time, and I get the argument of tariffs, yes, prices go higher in the US, but that's short term. Long term, it actually works out for any nation that essentially takes in tariffs. But the idea that essentially the United States was making money for the first time and not being bullied by other countries, because every country essentially was bullying the US when it came to money, believe it or not. Trump came in, started to tariff those countries back and get some income for the US. And the Democratic Party hated it. They hated the idea of the US making any sort of money. So now refunds are going to be happening by the looks of it in 5 years' time. But that's what essentially that's what's referring to, where the market is at limbo because of trade policies as well. They're blaming the trade policies on Trump. It's got nothing to do with Trump. The courts, essentially, the high courts, were weaponized by the Democratic Party. It couldn't get more obvious than that. And also regarding the military tension situation, that's not helping either towards the market space, because we don't know if a war between Iran, Israel, US, and China and Russia and so on is going to kickstart tomorrow or the day after. And that's why the crypto market space is a bit stuck, you could pretty much say. While the Supreme Court recently struck down proposed tariffs and the market remains on edge due to escalating essentially friction with Iran, which has driven capital towards traditional safe havens and away from essentially volatile assets. Ironically, Bitcoin is supposed to be known as the safe haven, as digital gold, not so much in scenarios like this. And it does go back also to what I said for the longest time, which is if essentially everybody can quote me on this pretty much. I said for the longest time, the narrative of digital gold for Bitcoin makes no sense. And I wasn't saying that to anger Bitcoin maxis in any sort of a way. I was only stating facts, but I was stating the facts based on no evidence. But now here's your evidence. I said for the longest time, and everybody can quote me on this, if Bitcoin is known as digital gold, then it should react like gold. And I said, if two countries go to war right now, what happens to Bitcoin and what happens to gold? I said gold will react and go up, safe haven. And I said Bitcoin will go down. And everybody can quote me on this. I've said this quote for the longest time, this one sentence, to prove the narrative of digital gold. I said if two countries go to war right now, I said, and the example I gave was China and Taiwan. I said if China essentially goes into war with Taiwan right now, tonight, the war happens. What happens to Bitcoin? Does it react like a digital gold? Does it react like gold? No, it goes down. What happens to gold? It goes up. So how can it be digital gold? And that's the example I've been giving for the longest time. And we've seen, and I didn't have any facts to prove it on, you can pretty much say. But then again, we did have the Ukraine and Russian war. What did Bitcoin do? It went down. We had the Palestine and Israel war. What did Bitcoin do? It went down. What happened to gold? It went up. But that is the longest, actually, there's one sentence that I've used for the longest time. Two countries go to war. What happens to Bitcoin? Goes down or up? It goes down. What happens to gold? It goes up. So it can't be digital gold. And I never said that the anger essentially is sort of Bitcoin maxis, but I was only stating the truth. And we're seeing more examples of that when essentially analysts from JP Morgan are coming out and going, yeah, we're not really sure if Bitcoin is going to, be seen as that safe haven as it essentially is, the narrative is for it, because it's not reacting like a safe haven. Bitcoin keeps on hitting a certain glass ceiling because of the Iran and Israel and US and China and Russia war, and it just hits the glass ceiling and sticks around and hovers around 64 to 65,000. And then it goes down from there because of tech stocks, and it goes back to the glass ceiling, and then it hovers here, and it goes back down again. Despite the current slump, some industry experts maintain that the market is undergoing a necessary cleansing, essentially of excessive leverage rather than a structural collapse. It's not a collapse in any sort of a way, but it shows the true colors of that asset. Analysts note that the futures open interest has dropped significantly from its October peaks, suggesting essentially that much of the speculative fourth has been removed. However, the death cross looming on technical charts and continued rout essentially on software stocks and the short-term outlook remains cautious as participants wait for stabilization in the broader equity markets. Now, we'll come back to Bitcoin's digital gold narrative a little bit later on in the show. But for now, that's just essentially what I'm going to be sharing with you. But we'll come back to it because there's more on that story. But essentially, that's what's being discussed right now. Bitcoin is stuck. They're blaming on Trump's trade policies, which nothing to do with Trump. The high courts essentially decided that the money that the US earned from tariffs should be sent back to those countries and those corporations. It's ironic. The Democrats keep on essentially screaming from their top of their lungs, billionaires should pay more taxes. Billionaires should pay more taxes. And when Trump makes money from tariffs from billionaires, the Democrats are angry. Why is Trump making billions from billionaires? Why is Trump getting essentially the billionaires to invest back into the US? But hang on a minute, isn't that what the Democratic Party wanted? Billionaires to be taxed more, billionaires to invest their money back into the US. Isn't that what Trump did? So why do you want the money back? So why are you trying to go against Trump? I don't know what really happens essentially inside of a Democrat's mindset, essentially a politician, but the image I get is, that one episode in The Simpsons when it shows Homer Simpson's head and there's just essentially a cartoon character with some drum sets just banging onto it. That's the image I get every time I think of a Democratic politician. Just nothing going on there, just echoes when you try to tap their heads. Now, moving on from that, but we'll come back to essentially that scenario because there's more on that, as I said, to Standard Chartered Bank. Standard Chartered Bank, stable coins eyeing a $2 trillion cap. Now, the essentially $2 trillion cap, essentially scenario, is something that's been discussed for about a week now. JP Morgan was the first one that mentioned $2 trillion cap, where just 1% of the Asian market space, it could open up the floodgates of $2 trillion to re-enter the market space, essentially for the crypto market space. Just 1% or 2%, $2 trillion is what we're talking about from the Asian market space. And it is something that's been picked up as a lingo by other corporations now, mentioning $2 trillion if we could get the Genius Act out of the way, $2 trillion if we could get the Clarity Act out of the way. And now it's been mentioned by essentially Standard Chartered Bank. So here it is. According to a research report by essentially Standard Chartered Bank released today, the stablecoin market is projected to reach a $2 trillion market capitalization by the end of 2028. This explosive growth essentially is driven by the regulatory clarity of Genius Act passed on essentially mid 2025 is expected to generate between essentially 1 trillion to essentially somewhere around essentially that $2 trillion mark, as essentially the surge is essentially in demand is so significant that it may force also the US Treasury to fundamentally essentially alter how it finances government operations, for example, T-bill essentially. Analysts like Jeff and John Davis essentially suggest without a change in issuers patterns, and the analysts Jeff and John are from Standard Chartered Bank, suggest essentially without a change in issuance patterns, T-bills could become too scarce, creating an estimated essentially $0.9 trillion shortfall essentially in supply. Suspending 30-year bonds to essentially accommodate this private sector appetite, the Treasury may shift away essentially from long-term debt. Standard Chartered essentially points to that the Treasury could also increase their T-bill issuance and potentially suspend the 30-year bond auctions for up to 3 years. Federal Reserve impacts, when combined with the estimated $1.2 trillion in demand, essentially from the Federal Reserve through essentially managements and reinvestments of maturing essentially mortgage-backed securities, total new T-bill demand could hit $2.2 trillion by 2028. Now, the geopolitical tensions are also weighing in on this as well. The growth of stablecoin sector is increasingly viewed as a tool for maintaining US dollar homology in a digital era. If you asked somebody inside the crypto space a long time ago, they would have told you, and you must have heard this, if you've been inside the crypto space for more than 2 years, 3 years, 4 years, 5 years, 7 years, this is probably one sentence you've heard for the longest time, that the dollar is going to go to zero. And I said for the longest time, it isn't. Because how can the dollar go to zero when it's backing USDT, when it's backing USDC, when it's backing RLUSD? And what I mean by backing is they're actually buying US dollars in a certain amount, a certain percentage to back their stablecoins. And it's something that you can go and read on Tether's website or Ripple's website or Circle's website. There has to be a certain amount of fiat also backing it. So every time Circle prints more USDC, they're also buying on the side some US dollars. Every time Tether prints more billions of dollars in USDT, they're also buying some US dollars. So how can it go to zero? And that's essentially what's being mentioned here. Treasury Secretary Scott Benson has signaled that the integration of stablecoins via the Genius Act could also become an important feature of financing the US government, effectively making stablecoin issuers some of the largest structural buyers of American debt, because also they're backed by US bonds. Stablecoins are backed by US fiat, US bonds. The immediate market reaction to such a shift would likely be a bull flattening of the Treasury essentially curve, as the yields at the long essentially and end fall relative to this essentially front and end due to reduced bond supplies. So this forecast essentially arrives at the stablecoin market currently valued at approximately $309 billion, and it undergoes a cynical pause following recent essentially market shocks. The Yield Summit bridge, essentially, the projection supports the urgency of the White House's Yield Summit as the administration seeks to build this massive pool of liquidity under the federal, essentially, oversight. They're saying basically, if we want the US dollars to survive going forward into a digital era, we need a working Genius Act. We need a working stablecoin act if we want to continue the US dollar's essentially livelihood as we move forward into a digital essentially world, which is a very, very valid point. Because if we don't get a Genius Act in time, then you know for a fact China is going to be pushing some sort of a stablecoin they might create out of the headwinds. Or the UAE might try to push their stablecoin. We know for a fact the EU is trying to push their stablecoin. Not saying they'll succeed, but they are definitely pushing it. Institutional adoption. Major players like Circle's USDC, which went public on the New York Stock Exchange in 2025, are already setting the standard by holding over 88% of their reserves in high-quality short-term treasuries. The Genius Act effect, the formalization of these rules, has moved stablecoins from a niche crypto convenience to a global financial phenomenon that is now critical to the stability of the US Treasury market itself. So, Stablecoins survive, especially US dollar stablecoins survive, US treasuries survive, US dollars survives. We don't get a genius thing, essentially a genius act completed in essentially a certain time period, then the EU will be pushing their currency, essentially their stable coin, into the market space, trying to get their dominance. The UAE will be trying to pushing their dominance into the market space. Hong Kong will try to push their dominance into the market space. China might even decide to finally create a stable coin, or they might just use essentially the Hong Kong stable coin instead, because we all know who runs essentially Hong Kong anyways. But essentially, that is also what's happening right now. They're saying it's come to a stage where it's urgent, which good, honestly, very good that it's come to a level of urgency now to pass the Genius Act completely. Because what they were stuck on, and what they have still been stuck on, is yields. You know, stable coins having yields, it's bad for the banks. And they're stuck on that one little page, which neither one could get their head straight essentially around it. It could be CEOs essentially from crypto companies, it could be the banks, or it could be the Democratic Party, Republican Party. There's just some difficulty of communication going on. But at least now they've came to a level of mutual level of understanding of urgency. That's very good. That means we could expect it maybe quarter one, quarter two done with, essentially. Now, moving on from that to crypto.com. Crypto.com has just essentially achieved a significant regulatory milestone, which amazing. Honestly, every time I see big, essentially, especially US crypto companies, but big crypto companies, taking another step inside the financial sector, it's always incredible to see and hear. So, Crypto.com has achieved a significant regulatory milestone by receiving an approval to operate as essentially a US federally regulated crypto custodian bank. This move places the platform in an elite category of digital asset firms, allowing it to provide institutional grade custody services under the direct oversight of the federal banking regulators. The approval essentially is seen to deepen its footprint within the American financial system and bridge essentially the gap between traditional finance and digital asset economies. Honestly, the idea of crypto taking more steps inside the traditional financial sector and in their own words, bridging the gap is an amazing sight to see because it just makes us and it tells us how closer we are to that essentially finishing line. The development is expected to have several implementations for the broader market space and institutional adoption. Institutional trust, by securing a federally essentially banking charter, Crypto.com can now offer services to large scale hedge funds and asset managers who require qualified custodians and statuses to meet their financial obligations. Regulatory priority. This approval grants the firm a similar standing to legacy financial institutions, allowing it to compete directly with banks that have recently entered the digital asset space. Infrastructure growth. The new charter enables the company to facilitate more seamless on-ramps for USD, further supporting the liquidity of the utility era ecosystem and integrating payment rails. Analysts also suggest that this federal approval signals a shift in the US regulatory essentially landscape towards creating a structured environment for digital asset banking. Following the passage of the Genius Act, regulators appear more willing to integrate crypto native firms that meet rigorous essentially compliance and capital reserve standards. This strict essentially expansion by Crypto.com not only strengthens essentially its competitive position against rivals like Coinbase and Kraken, but also provides a more robust foundation for tokenization of real world assets. I also did say a long time ago that essentially crypto companies, if anybody remembers me quoting this word, this sentence as well, that crypto companies will essentially, crypto exchanges will eventually turn into banks. That's something I said about 2 years ago. Now, and you fast forward to the day where, Crypto.com, Coinbase, Circle, Ripple, Paxos, they're all turning into neo banks, essentially. The easiest way to put it for people to understand, they're all turning into neo banks, digital banks, essentially, because they can technically operate as banks because they have the large customer base. They make incredible amount of money on fees. They offer some sort of savings accounts to crypto users, Crypto.com, Binance, and so on, in terms of yield services and staking services. They offer you a bank card. Binance offers you a bank card. Crypto.com offers you a bank card. Essentially, Coinbase offers you a bank card. They technically were already operating in some sort of a bank. Everybody has a wallet, which is technically a bank account. They have a huge user base. So everything they took, every footstep they took was somehow turning into a bank. Now, moving on from that to Hong Kong. So some information has been released, essentially, that a previously anonymous Hong Kong-based entity has broken its silence after its $436 million stake in BlackRock's IBIT Bitcoin ETF sparked intense market speculation and regulatory scrutiny. Before we talk about that, let's go inside the comment section first. Let's see what's happening inside the comment section. As I said previously, this is live as always, which means if you do have any questions or comments, go for inside the comment section. More than happy to help you out. Also, CMF members, as I said at the beginning of the live, if you tuned in a bit late, I was able to fix essentially the post situation. So if you're watching this right now on X, CMF members, just like previously before, I was able to post the live show. So if you take 2 seconds of this live show, just go and like and retweet the live show on X. Just like before, I've made it into a post on X on my profile, and I've pinned it on my profile as well. So it's the first post you would see. Go and like and retweet if you already haven't. If you have, thank you so much to every single one of you. Now, let's see where we're at inside the comment section before we go through the next news. Miles and CMF, it's good to see you as well. Share the live. Let's go. Scott, Miles, I can't repost like I used to. I guess X got tired of me reposting so much. Maybe it probably did. Good evening, Miles. How you doing? I'm doing great. Callie, good to see you. How you doing? Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? What up, Miles and CMF? Hope everyone has had a great weekend. Let's go. Let's go, Ray. How you doing, brother? Is there an issue with YouTube? I can't find you. I don't think so. There shouldn't be any issues with YouTube. We've got people tuning in from YouTube right now. Hi, Miles and CMF. Good to see you as well, Stormy. How you doing? All good. I must have needed to refresh. Got you on YouTube now. Okay, let's go. I still can't like and repost. Joe, I've pinned the live show on my X profile. If you go to my X profile, I've pinned the live show. Just click essentially retweet or like. It's pinned now. I can't either, Joe. Let's go, Mike. How you doing? Hello, Miles and family. My apologies, I'm late. No problem, Lena. Good to see you. How you doing? Hi, Miles and CMF. Peg. Good to see you. How you doing, Peg? How you been? Spot on with the Democrats' head description. All facts. Let's go, Ray. Miles, if you had to sell one of your big bags of XLM or HBAR or XRP, which one would you sell? I was thinking of selling bits of all three, just so I still have a bit of everything. You could do, obviously not financial advice whatsoever, but if you really, really need money, and it could be for bills, for example. If you really need money and you had a big bag of XRP and a big bag of XLM and a big bag of HBAR, I would sell more of HBAR than I would of XRP or XLM if I needed bills, if I needed to pay some bills off. I would sell a little bit more of HBAR compared to XRP or XLM. I would sell a little bit of HBAR and then a little bit of XLM and then a tiny bit of XRP to pay the bills. If I really needed money, that's what I would do. Not financial advice whatsoever at all. Hi, Miles. Weird question, but are you a Manchester United fan? Honest answer, I was a very, very, very long time ago. When it was essentially the era of David Beckham, the era of Ronaldo or Rooney, and then it pretty much died out for me after that. But yeah, I was a very long time ago. But after that, I don't really support any football teams. Honestly, it's actually the World Cup that I'm more interested in football. But Premier League, I'm not interested anymore, I'll be honest. More of an F1 fan. Now, unless it's World Cup, then I'm a big fan. Or pretty much any country. I'll be honest, just want to see what happens. Now, a previously anonymous Hong Kong-based entity has broken its silence after its $436 million stake, essentially, in BlackRock's IBIT Bitcoin ETF sparked intense market speculation and regulatory scrutiny. The investor, identified as a major family office with deep ties to mainland, essentially to mainland industrial capital, clarified that the massive acquisition was a part of a long-term strategic allocation rather than essentially a speculative play. The disclosure essentially has claimed fears of potential market manipulation while highlighting Hong Kong's growing role as a primary gateway for institutional capital flowing into regulated digital assets and products. Now, a lot of people said when Hong Kong opens its doors, Chinese investors won't be pouring into Hong Kong to get involved inside the crypto space. But it turns out Chinese investors are involved inside the crypto space through Hong Kong. even though China is very restrictive on crypto essentially and Bitcoin mining and stablecoins and everything else that comes with it, and they only are essentially, China is only restrictive on stablecoins the day they found out by Anton, who is Putin's advisor, that America might be using stablecoins to make the US dollar survive, which is exactly what's happening. And straight away, the next day, China comes out and bans stablecoins because the idea of America, maintaining their US dollar strength in a digital world threatens China to the max. Not, the Chinese people, but the government of China, essentially. Xi Jinping couldn't sleep all night. The next day, he comes out essentially and bans stablecoins. But that's pretty much essentially, I'm guessing, what happened. But essentially, it turns out Chinese firms are getting involved inside the crypto space, and they're doing it essentially through Hong Kong. And one of the biggest investors of a Chinese firm through Hong Kong, they spent $436 million on Bitcoin ETFs through BlackRock, through Hong Kong. So, capital flight versus allocation. The move essentially is seen as a sophisticated hedge against regional currency volatility, signaling that high net worth Asian investors view Bitcoin ETFs as a premier neutral asset. Institutional legitimacy, the sheer scale of the position representing one of the largest non US holdings, underscores essentially the success of BlackRock's infrastructure in attracting old money into the crypto ecosystem. Also, regulatory transparency. By voluntarily discussing the identity of the group, essentially it aims to align with the stringent transparency standards expected by both the SEC and the Hong Kong SFC, potentially smoothing the way for further large-scale entrants. Now, despite the controversy surrounding the initial mystery buy, analysts believe that this transparency will actually encourage other sovereign, essentially, and family offices to follow in suit. The timing is particularly relevant as Bitcoin continues to trade in a volatile range near $67,000, with institutional flows being reinforced by these massive transparent holdings. Moving forward, the industry also expects their specific investments to serve as a bellwether for how essentially Eastern capital will attract within Western regulated crypto vehicles in a period of heightened geopolitical tensions. So, the idea essentially that could we get investments coming in from China? Is it even possible to get investments coming in from China? By the looks of it, yes, it's highly possible to get investments coming in from China because they're all coming through Hong Kong by the looks of it. So far, one family office has came forward and said, yep, we own $436 million in BlackRock's Bitcoin ITF. So far, only one family has come forward. Who knows how many more Chinese families who live in China are investing inside the crypto space through Hong Kong. So the idea of the floodgates, which BlackRock mentioned at the Hong Kong essentially consensus crypto event, the idea essentially that just 1% of the Asian market could open the floodgates of $2 trillion into the crypto market space. Is that even going to happen? Are the Chinese, the Singaporeans, essentially any of these Asian essentially countries even going to enter? By the looks of it, yes, they're already in the market space. Well, some are. The majority still aren't, but some are, which is a good sign. That means with the correct rules and regulations, the rest of them will definitely enter because we don't even have proper regulations and some already entered very silently. Now, moving on, essentially from that to Solana. Now, we barely talk about Solana on this live show. Rarely talk about Solana on this live show. And the only reason I'm going to mention now is because one firm has decided to, help Solana to prepare itself for this super cycle we're going to be entering into. And also because of the whole quantum situation as well. So here it is. A prominent development firm within the Solana ecosystem has officially broken ground on a high new speed infrastructure initiative designed essentially to prepare the network for the anticipated next supercycle. The project focuses on drastically increasing transaction throughput and reducing essential latency to ensure the blockchain can handle the massive influx of activity expected as institutional adoption accelerates. By upgrading the core hardware and software essentially stack, the developers aim to maintain Solana's competitive edge as the preferred layer one for high frequency trading and consumer-facing decentralized applications. This streak, essentially infrastructure push, is aimed at fortifying the networks against the demands of $2 trillion essentially stablecoin market and the growing trend of real-world asset tokenizations. Again, this is all based on what BlackRock said. Honestly, BlackRock started, this whole conversation of $2 trillion, just 1% from the Asian market space. Now everybody's talking about it. And there's a company who's trying to prepare Solana for that 200, essentially for that $2 trillion. And again, that is just 1% essentially of the Asian market space. Now, also the announcement comes at a time when competition among layer one networks is intensifying quite a lot right now, with Ethereum's layer 2s and XRP Ledger also vying in for institutional dominance. Analysts suggest that by the scaling ahead of the next market surge, Solana is also positioning itself to capture some significant portion of the utility era traffic we are about to receive as we go throughout this year. Because this year, believe it or not, is still seen as essentially utility era, the integration era, and so on. We even had essentially from XRP, Monica Long saying essentially if she had to describe this year in one word or one sentence or XRP, this is essentially the institutional year. It's all about institutions. It's all about institutional money, institutional liquidity, and in some levels, international institutions as well. Now, moving on, essentially from this one company trying to prepare Solana for a super cycle, and it tells you again, you know, why do this if there's no super cycle? Because there is. But a super cycle can only happen if we have the correct regulations in place. We need to have a Clarity Act. We can't have this limbo situation going on between Democrats and essentially Republicans not coming to a conclusion for the Clarity Act. We need that for any sort of cycles to be happening. We need the Clarity Act. We need the Genius Act, the yield situation sorted out. But anyways, putting that to one side, now we're going to talk about World Liberty Financial, which famously known as the Trump Family Crypto Project. So, the Trump Family Crypto Project, which is also relative to this whole Genius Act situation as well, and I'll explain as I read along. So, World Liberty Financial essentially was attacked, you could pretty much say. A very, very coordinated attack happened on World Liberty Financial. And let me just explain. The Trump linked stablecoin, World Liberty Financial, experienced a significant price volatility and wobbles. Today, following claims from the project's leadership that the ecosystem is under a coordinated attack. According to a recent, essentially, Coindesk report, the project team reported a sophisticated campaign involving both technical exploits and targeted disinformation efforts aimed at destabilizing its liquidity pools. Now, who could be aiming to, essentially criticize World Liberty Financial? Who would cause a coordinated attack on the Trump Family Crypto Project? I'll be very honest. The number one person, the number one group that comes to mind is Democrats. Because for the longest time, the Democrats, hating Trump, but they also want to push Trump out. They don't like the idea of Trump being involved in crypto, and they're blaming that for the reason for not passing a Clarity Act, which I already explained is complete BS. They just don't like the idea of Trump in any general. Trump could, save the world from cancer, and the Democrats will still criticize him in some sort of a way. So they're saying essentially the World Liberty Financial was attacked, a very coordinated attack. One attack was on the network, the other attack was on disinformation. According to Coindesk, essentially, the report, this turbulence occurs at a sensitive time for the venture, which has recently been aggressively expanding its footprint through the high-profile real estate tokenization partnership, which, and it was true, recently, essentially, the World of the Financial Project was able to land itself a very, very impressive contract. Now, I just want to explain something to if anybody's watching this for the first time ever and they're thinking I'm lobbying for World Liberty Financial or, essentially I'm trying to push this token out, I don't own a single penny of World Liberty Financial. Never have. I've never brought it in my entire life. Essentially, from the beginning of World Liberty Financial until now, I've never essentially spent a single penny on World Liberty Financial. And my reasoning is not just because, Trump or World Liberty Financial. I couldn't care less about that. My reasoning is I don't go for crypto projects that are linked, as I said multiple times, to celebrities, athletes, politicians. Any crypto project that is attached to a certain figure, politician, athlete, celebrity, whoever may be, musician, artist, I don't go anywhere near it. So just want to put that out there before anybody thinks I'm reading this and I'm lobbying for Trump's World Liberty Financial Project. It's a great project. Everybody should buy it. Hell no. I don't like the idea of any crypto project attached to any political figure, to any essentially athlete, celebrity, musician, artist. Don't like the idea whatsoever. I like crypto projects with structure, foundation, licensing that can essentially do well in a regulatory foothold. That also, backed by major partnerships and contracts. That's what I like, not figures, attached to any sort of person. So I just want to put that out there before I continue forward. If anybody thinks I'm lobbying for this project. The project's response to the crisis and the essentially market impact have highlighted several critical concerns regarding its current infrastructure. Liquidity pressure. The coordinated sell-offs tested the stablecoin's peg, leading to a brief depegging events on decentralized exchanges as the team moved to reinforce collateral backing. So they tried to attack essentially the network, and then the team, essentially World of the Financial, was able to keep people's assets safe. Good on them for doing that. The security essentially allegations. World Liberty Financial leadership alleged that bad actors attempted to manipulate the protocol's governance, smart contracts, and forcing a temporary halt to certain platform features to protect users' funds. Great again. Institutional sentiment. Analysts are closely watching to see if this volatility impacts the project's pilot programs with major firms like Apex Group and Securities, which are the central to its utility era, essentially ambitions. Despite the attack, the World Liberty Financial team maintains that the underlying asset remains secure, that the volatility was a result of external manipulation rather than an internal failure. However, the market skeptics point to the incident as a reminder of the unique risk associated with politically linked digital assets during periods of high macro essentially tensions, which is true. This is the issue when a crypto project is attached to someone. This is what happens because if people don't like the person the crypto is attached to, they would try to attack that project because they don't like the person it's attached to. So why was World Liberty Financial targeted? Was it targeted randomly? No, it was essentially was targeted because World Liberty Financial is attached to the Trump family. Now, which is completely wrong for anybody that essentially thought it was, right to attack World Liberty Financial because of Trump. Trump has done quite a lot of things for the crypto space that were exceptionally positive. However, the market skeptics point to the incident as a reminder of, essentially the idea of a crypto project being attached to a person. As the project works to restore stability, the event has added a layer of caution to the broader stablecoin yield discussions. This is what I wanted to get to, okay? So, think about the timeline. I've always said to everyone that watches my live shows and to the CMF, it's always about the timeline. You've got to look at the timeline. Why did this happen now? Why couldn't this happen essentially last year? Why couldn't why couldn't World Liberty Financial get compromised last year? Why is World Liberty Financial getting compromised now? What's happening right now? What's the main discussion? The main discussion that's happening right now is stablecoin yields and also the Clarity Act. So why didn't XRP's network get attacked? Why didn't Solana get attacked? Why did Ethereum not get attacked? Why did AVAX not get attacked? Why did it have to be World Liberty Financial? Because it proves a bigger point to the discussions they're trying to have right now. The banks are saying we don't want to see yield on stablecoins right now. The Democrats are backing that. The Republican Party is saying no, yields make sense. The idea of a stablecoin yield makes sense because when you're staking your stablecoins, you're not just doing it for the yield, you're doing it for the ecosystem essentially. And that is the main argument. This reeks of a coordinated attack, either from a bank lobbyist or a Democrat lobbyist. It just reeks of that attack. Why did I have to go for Trans Project now? Just look at the timeline. And because of what happened to World Liberty Financial, essentially they've said it intensified the discussions for yield on stablecoins. Because Trump's project was attacked, because the stablecoin that Trump's World Liberty Financial crypto project created depegged ever so slightly, now they're having intensified discussions about what's the point of a stablecoin if it just keeps on depegging? What's the point of a stablecoin? I mean, should we even give yields to stablecoins? I mean, there's no safety in it. Banks have more safety, and that's what it looks like right now. But it was a coordinated attack, not just on the network, but an entire project. On one side, they attacked the network. On the other side, they started spreading disinformation about the project. That was very coordinated. And it's happening at the exact same time when the yield discussions are happening for stablecoins, which has now intensified the speech. Because it seemed like stablecoins were going to win. It genuinely seemed like, and especially that the CFTC board of advisories is like, essentially Brian Armstrong, Brad Garlinghouse, that also, and the Genius Act, which is giving more power to the CFTC than it is to essentially the SEC. So slowly, things are working out for the crypto space. More power to the CFTC than the CFTC Crypto Advisory Board. Things were working out for the crypto space. And then suddenly this happens. Stablecoin situation, DPEG, World of the Financial, Trump crypto project. It hits on every angle. Democrats said for the longest time, Trump family should not be involved in crypto space, and they're going to blame this scenario because of that now. Banks said stablecoins are not that great. It's better to have a traditional bank account. Depegging situation happens for World of the Financial. This is all very coordinated, extremely coordinated. And then obviously the beauty of disinformation, it spreads like wildfire. The truth takes a very, 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 very long time to spread. But a lie, it's like gasoline in a lighter. It just goes right through. It spreads like wildfire. Everybody knows about it instantly. But the truth always takes time to get through. Very sad world we live in. Now, moving on from World Liberty Financial getting essentially on a coordinated attack scenario, which worked out in the favor of the banks on the discussions they're having right now, trying to prove that it's better to have a traditional bank account than essentially a stable coin or any sort of crypto project. Honestly, this reeks of Democrats and banks. 2, Iran, US, China, Russia, Israel. As I said, we're going to come back to it. This is coming back to it now. The first news that I read out on this live show, this is part 2 of the whole scenario of Bitcoin staggered, market limbo, doesn't know where it's going to go. So the discussions are right now that essentially we're going to be going into a war scenario within a few days. Trump gave Iran 10 days to give some sort of a response, 10 to 15 days to give some sort of a response. There's no response from Iran. Iran, in fact, made another purchase essentially to Russia to purchase over €500 million in euros worth of weaponry. Iran is buying more weaponry. Essentially, the US is bringing more military towards the essentially, the Persian Gulf, essentially closely as possibly they could get to the Persian Gulf. And that is keeping the market at limbo. Bitcoin can't break to go up because the slightest essentially attack from the US or Israel or Iran, or even if they're stupid enough, Russia and China, would cause Bitcoin to not collapse, but shoot down. Now, there is also the alternative, which essentially, there's a part 3 to this, which it can shoot up as well. But let's talk about part 2 now. The collapse, essentially, of Iran's national currency, the rial, essentially. This is part 2 and part 3. The collapse of Iran's national currency, the rial, is drawing stark comparisons to the Lebanese economic crisis, as hyperinflation forces citizens to seek refuge in decentralized assets. It's not just that the Iranian government is going to, essentially run towards crypto once they get attacked by the US or Israel. The Iranian people are also running towards crypto as well. So this could be a war where instead of the market shoots down, it can also go up. And also it's going to shoot up in any sort of way. But it could also go down maybe for a few days and then go back up and shoot up. According to CoinDesk, the real's plummet has essentially dismantled local purchasing power, leading to a surge in peer-to-peer trading and the use of digital assets as a primary tool for survival. This trend essentially mirrors the essentially Lebanization of the Iranian economy, where a loss of faith in central banking system has transformed Bitcoin from a speculative essentially investment into a critical necessity of preserving household wealth. The desperation of the Iranian citizens has highlighted several key parallels between the two essentially cries and resulting a shift in financial behavior. Failed capital controls. Much like essentially in Beirut, the Iranian government's attempt to freeze accounts and limit foreign currency access have backfired, driving the population towards borderless censorship-resistant alternatives. Bit ironic, no? The Iranian government gets sanctioned by the US, so the Iranian government starts using Bitcoin. The ironic part is the Iranian government that essentially blocks their own people from getting access to essentially, funds, which made the Iranian people start using crypto to avoid their own government sanctions, and Iran is essentially avoiding American sanctions by going towards cryptocurrencies as well. It's just one big loop, essentially, is what's happening right now. The black market premium. Local citizens in Iran are increasingly ignoring official exchange rates in favor of Bitcoin dominated prices for essential goods and services, effectively creating essentially a shadow economy that operates outside of the state oversight. Remittancy lifelines. With traditional banking essentially corridors served by sanctions and instability, Bitcoin has become the primary rail for the Iranian diaspora to send financial support back to families struggling with the daily essentially devaluations of the rial. While the Iranian government has historically maintained a complex relationship with the crypto sector, alternating between the state sponsored mining and the retail crackdowns, the current crisis may force a policy shift. Analysts suggest that essentially that as the real continues downward spiral, the utility era of Bitcoin is being proven in real time as a tool for financial essentially sovereignty in falling economies. This grassroots adoption remains a powerful counter narrative to the institutional focus seen in the West, reminding the global markets that for many, Bitcoin is a vital hedge against total economic collapse. Now, the Iranian people are not only going for Bitcoin, the number one coin that they actually do go for is USDT. For some reason, they wanted to leave that out of the article. But the fact of the matter is, the Iranian people, the number one token that they do use is USDT, and it is mostly on Tron's network, to be fairly honest as well. Bitcoin is another coin they use, Monero also, Zcash also, Shiba Inu also, and some other ones as well. But this is why I say, this war could go the other way around as well. Essentially, war starts, we might go down, but we'll come back up because everybody wants to move their money on crypto, starting with the Iranian government and then the Iranian people. Or it could be first strike, you might see crypto essentially go up, certain crypto projects go up, because the Iranian government gets a hint they're about to be attacked and they start putting their money into the crypto market space. The first attacks essentially that happened, essentially, the first warnings that Iran received from Trump of a possible attack before these warships started going towards Iran, the Iranian government made Monero reach all-time highs, just to put in perspective. Now, part 3 of this US, Israel, Iran, China, Russia situation. This is part 3. That was part 2. Part 1 was the first news I read out. That was part 2. Essentially, that crypto could possibly go up. This could be the only war that crypto could actually have a chance of survival of going up instead of going back down again. Or just go down a little bit and then shoot back up. So here's part 3. According to a report from Gadget Review, published essentially today, Binance allegedly, now this is also on the New York Times, Binance allegedly fired a group of compliance investigators after they uncovered $1.7 billion in cryptocurrencies flowing to Iranian linked entities. So, as you know, the US sanctioned Iran for over 47 years. Pretty much every country sanctioned Iran for 47 years, except Russia and China, and a few other ones like North Korea, but who cares about that one? But it seems like Binance was actually used allegedly, Binance was used as some sort of a middleman for Iran. The Iranian government was able to move $1.7 billion through Binance. How do we know this? 2 people were hired to, essentially sort out the paperwork in Binance. These 2 employees figured out that essentially Binance was looking the other way when Iran was pumping $1.7 billion. The Iranian government was pumping $1.7 billion into Binance and out the other way. So essentially, Binance was used for money laundering by the Iranian government. 2 employees from Binance found this out. What do you think happened to those 2 employees from Binance? Did they get essentially, an award, a recommendation, get a better job? Did they get an appraisal? Well done for you to find that fraud. No, they got fired. Both of them got fired. 2 people that were hired to sort out the financing of Binance They found out that essentially Binance was looking the other way when Iran was pumping $1.7 billion into them. And those two people got fired straight away. So the article essentially claims that internal documents show that the compliance team flagged these transactions, primarily involving Tether stablecoins, on the Tron blockchain in late 2025 before being suspended and ultimately terminated for violating company protocols. The report suggests that these transactions occurred despite Binance's high-profile 2023 settlement with the US Department of Justice, which included a $4.3 billion fine and ongoing essentially federal monitoring. Former prosecutor and industry experts cited that the article expressed shock that such an event could occur while the company was under active monitorship. That's the worst part, also. When did this happen? Exactly when the DOJ investigated Binance. Everybody can remember back then, when the DOJ investigated Binance for essentially fraud allegations. CZ went to prison and the DOJ took over Binance. That's when this was happening. Under the watchful eye of the DOJ, the Iranian government was able to wash $1.7 billion through Binance. They hired two people, fired those two people for finding out, and they were able to do this while the DOJ was looking into Binance. Or was essentially was controlling Binance, you could even say. So I don't know how that one happened. You could say maybe Binance didn't realize it or look the other way, but the DOJ was investigating fraud. How did they not see it? Binance, however, has denied any wrongdoing, stating that they proactively removed the essentially flagged accounts and notified the relative authorities. The situation is further complicated by the shift in political dynamics, including the pardon of essentially CZ by President Trump, and occurred as Trump's family-owned crypto ventures reportedly established business essentially ties with Binance Exchange, with Chief Compliance Officer Noah Perlman also rumored to be essentially exiting company later this year. The report paints a picture of significant internal turmoil and potential shift in institutional priorities regarding international sanctions. So, what is verified? Is this fake news, essentially, of what's been happening inside the crypto space? Is Binance really being used for money laundering, and is Binance really looking the other way? There are a few things we can verify, and there are a few things we can't. So what can we verify? Is Binance actually the hub of money laundering for the Iranian government or any other government out there? So what is verified? This is what's verified so far. It is true that at least 4 people, and it wasn't 2 what was reported by the news, 4 investigators were terminated or shown the door after flagging these transactions. Internal documents and statements from the investigators confirmed they were removed shortly after reporting the $1.7 billion money trail involving the Iranian Islamic Republic government. So it is true that Binance essentially had 4 investigators, not 2, 4 investigators that found out that Iran was using Binance for money laundering, and those 4 investigators of Binance were fired pretty much for coming out with this information. What also is verified is that it is true that the transactions primarily used USDT on the Tron network, which has been a point of contention for regulators regarding sanction invasion. Any country that's trying to avoid sanctions, when they do use USDT, they use the Tron network. Why? Because of Justin Sun. He's also a bit of a crooked person, you could pretty much say. So, what part of this is contested? Binance denies that the investigators were fired because of their discovery. The company's official position is that the employees were terminated for violating company protocols and unauthorized disclosure of client data. Binance maintains that they actually cooperated with the authorities once the accounts were flagged. So Binance is saying, once we found out those accounts were being used by the Iranian government for money laundering, $1.7 billion, we flagged the accounts straight away and let the authorities know. The only odd part about the story is, why did you fire the 4 investigators when they found out about the fraud? So if Binance did really cover up the situation, and this is essentially what the verdict is right now, while the firing of the investigators is a fact, whether it was a deliberate or a cover-up or a protocol violation depends on which side you believe. Former DOJ prosecutors have publicly called the timing shocking especially since Binance is currently under a federal monitorship. The situation remains a major scandal because it suggests that even after the $4.3 billion settlement, the world's largest crypto exchange is still struggling or refusing to fully stop the flow of funds to sanctioned entities. So it seems like Binance is essentially the hub for money laundering. And I hope it isn't, because I like Binance, I like CZ, and I hope Binance isn't the hub for money laundering. But if Binance is being used for the hub, essentially for money laundering, shame on Binance for doing that. Because it doesn't only paint a bad picture for Binance if they are doing that, it paints a bad picture in general for crypto. That's not the image we want. For the longest time, we've been trying to walk away from that image of cryptos used by criminals, cryptos used by bad people around the world, and so on. That's the label crypto's been given by a lot of politicians. And we always try to say, no, crypto can bring good for this world. Crypto can help a lot of people. And then you get, things like this. The world's biggest crypto exchange is actually used as a hub for money laundering, and they know about it and they look the other way. And when employees find out about the money laundering, they fire them on the spot. That's not an image we want to give. So Binance, if you are really doing, things like this, stop it, because it's not the image you should be putting out there, and it's not the image the world wants to see of crypto. Because there's still a lot of people that judge crypto around the world, and we really don't want to be known as the hub of money laundering when it comes to crypto. We want the crypto to be known as the next era of money, the next financial era. Essentially, this innovative blockchain that could change the world as we know it. That's what we want crypto to be labeled as, not the hub of money laundering. So if you are doing that, Binance, shame on you. And if you're not, I'm sorry for saying it. Now, Japan is what we're going to talk about next on tonight's live. Before we talk about Japan, let's go inside the comment section first. Let's see what's happening there, and then we go straight into the next news on tonight's live. Let's see where we're at. We were at here, I think. Nope, we were here. What's happening to my mouse? Miles, what is the deal with? No, okay, we're here, I think. Yeah, here we go. Miles, how come you don't have the green screen anymore? I just got rid of it. I was bored of the green screen, I'll be honest. I just prefer my normal background. Miles, why is everyone. Miles, what is the deal with this crypto down path? It's the war scenario, it's not making the markets move. And also, they're blaming it on the tariff situation again. The tariff situation, don't blame that on Trump, blame that on the Democratic Party. The war scenario, it's something that needs to be done. Also, the Mexico scenario with the Mexican cartels, I'm guessing everybody's seen the news. All of a sudden, randomly, a Mexican cartel situation happens where, a massive leader gets taken out. And believe it or not, Iran is actually involved in that hit. I'm telling you right now, this is why the Iranian government needs to be removed. Okay? They are genuinely like cancer. They just spread everywhere. You know that old saying, that people use, you give someone an inch, they'll take a mile. You give the Iranian government an inch, they'll take the whole world if they can. One person that was also arrested in this whole cartel Mexican situation was an Iranian lady who is also one of the leaders of these Mexican, essentially, who's a daughter of one of the essentially Mexican leaders as well, the cartel family members. Iran actually had a hand in that. They probably thought to themselves, if we disrupt Mexico, maybe America's focus will go to Mexico. Honestly, they have a hand in everything. Every single bad thing that happens in this world, people will blame it on Israel, or people will blame it on America. Believe me, you're all looking at the wrong person. You're blaming the wrong people. Every single bad thing that happens in this world is because of the Iranian government. It's because of the Islamic Republic of Iran. Every single bad thing that happens in this world. And I'm not even joking. They have so much of a reach where one of the leaders of the Hells Angels was Iranian and was money laundering for the Iranian government. He fled to Germany and then fled from Germany back to Iran. Everything you look at that's bad in this world, believe me, the Islamic Republic of Iran has a hand in it. Nobody would ever thought Hell's Angels. Nobody ever thought cartel members. Anything in this world, they have a hand in. You remove the Iranian government, honestly, just look at how the world will restore itself rapidly. This is why they're like a cancer, honestly. Miles, and that's why I call them like an octopus. They have tentacles everywhere. Miles, why is everyone talking about $2 trillion coming from Asia, but no one is talking about Trump's promise of $15 trillion that's supposed to come? Trump's money can only come on a few points. One, the Democratic Party needs to get over itself and pass the Clarity Act with the Republicans. Two, they need to pass the Genius Act regarding the yield situation. Three, they got the Supreme Courts to go after Trump's tariff policies. How is Trump supposed to inject the market space with money if he has to give it back, according to the Supreme Courts that were weaponized by the Democratic Party? So you got to consider a few factors when essentially we talk about Trump injecting trillions of dollars into the market space. The money he was expecting to inject into the market space is right now on halt because, again, the Democratic Party. We could have had a Clarity Act, but then we went for a 45-day government shutdown because of the Democratic Party. We could have had a full-on Genius Act, but no, the banks weaponized the Democratic Party to say yield stablecoins are bad. We could have had a Clarity Act again, but no, the Democratic parties don't want to come towards the table to give any sort of mutual response. Everything, we could have had trillions of dollars injected into the market space over time, not overnight. But no, the Democratic Party wanted to weaponize the Supreme Court to go after Trump's tariff policies. Every step Trump takes forward for the United States, the Democrats try to pull him back. Every step he takes for the crypto, essentially market space, the Democrats try to pull him back. We get a Genius Act, Democrats are like, no, we don't like yields. Why? Because the banks told us. We want a Clarity Act. No, we don't like the idea of Trump making money on essentially crypto. We want to inject trillions of dollars into the US market space. No, because Trump brought the money in. If we need money, should do Uber. Smells like JP Morgan or Rothschild's event to me. I believe so as well. Honestly, Shelly. Facts. What does that cause a stablecoin to depeg? Certain amount of money not being inside of it, or it could be essentially if it injects too much, that could also cause it. Hi Miles and CMF. Manny, good to see you. How you doing? Someone's being paid off. Hi Miles, good to see you as well. Millie, good to see you as well. How you doing, Millie? Nimos Ruben Joe was killed today. I was typing just that, Miles. Let's go, Lena. And yeah, that's essentially what's happening right now. But anyways, moving on from the cancer spreading Islamic Republic of Iran to Japan. Japan SBI Holdings is significantly advancing the utility era by announcing essentially the issuance of the 10 billion yen, $66 million, essentially is what SBI Holdings is coming forward with, on chain bonds, which notably features XRP rewards for retail participants. This initiative essentially is designed to bridge traditional corporate debt with blockchain-based essentially incentives, allowing small-scale investors to gain direct exposure to digital asset ecosystems through a regulated financial instrument by utilizing the XRP ledger for parts of the settlement and reward distributions. SBI is reinforcing its commitment to the asset essentially that particular integration into Japanese ecosystems or Japanese economy. We talked about a long time ago regarding essentially Japan market space, SBI Holdings. When are they going to take their first steps? When are they going to, take one step in towards the XRP market space? Because we have SBI Ripple for the longest time. Well, now we're starting to see that SBI Ripple partnership, giving some fruit, you could pretty much say. The structure of this bond issuance highlights several key straight moves within the Japanese market space. Direct XRP utility investors who hold essentially the bond until maturity will receive a portion of their returns in XRP, marking one of the largest corporate efforts to distribute digital assets to retail and essentially bondholders. Banking also infrastructure. The project leverages SBI's extensive banking network, effectively turning a standard financial product into a massive on ramp for XRP Ledger. Regulatory alignments. This move also follows Japan's recent steps to essentially reclassify XRP as a regulated financial product, proving that the legal clarity essentially is necessary for such a high profile institutional offering. Now, we talked about essentially Japan greenlighting XRP as essentially a regulated product. Now we're starting to see some movement happening from SBI Holdings saying that XRP is going to be the core pretty much of their tokenization scheme. This announcement is being viewed essentially as a major catalyst for the broader adoption of tokenized real world assets in Asia. Analysts suggest that by offering XRP rewards, SBI is creating a loyalty as yield model that could be replicated by other major financial institutions looking to engage essentially in terms of the younger tech savvy demographic. As Bitcoin remains volatile, the steady institutional progress of XRP Ledger in Japan provides a robust, essentially fundamental counter narrative focused on long-term essential infrastructure and cross-border settlement utility as well. This is incredible news essentially for XRP, and the mentions of real-world assets in XRP in other countries could also follow Japan's footsteps. So, are other countries following Japan's footsteps? XRP Ledger tokenization? Yes. Dubai has officially launched a dedicated secondary market for tokenized real estate, starting with $5 million pilot program powered by XRP Ledger. So it seems like other countries are also taking note of Japan tokenization, XRP Ledger, because Dubai straight away announced XRP Ledger tokenization starting with $5 million. This initiative allows investors to trade fractional interest in premium commercial properties with the same ease as shares essentially on stock exchange. By leveraging the XRP Ledger's native speed and low transaction cost, the platform aims to solve the liquidity issues traditionally associated with high-level property investments. The development represents a significant step forward for the utility era and the growing essentially real-world assets essentially sector as well. Fractional liquidity. The market enables investors to buy and sell small portions of properties, lowering essentially the estate markets in the Middle East. Instant settlements, transactions essentially settled in real time on chain, eliminating the weeks of paperwork and intermediary fees typically required for property transfers. And the project operates under the Dubai Virtual Asset Regulatory Authority, which is the VARA, ensuring that all tokenized assets meet strict compliance and investor protection standards. As institutional interest in XRP Ledger continues to grow, the secondary market serves as a blueprint for how essentially global markets and financial hubs could modernize their legacy industries. Analysts believe that the successful tokenization of Dubai's real estate will pave the way for other hard assets, such as gold and infrastructure projects, to move onto the ledger. This move reinforces XRP's role as the critical bridge between physical property and digital liquidity in a transparent, regulated environment. Honestly, this is incredible news for XRP Ledger. One, from the Japanese market space, we're starting to see, that SBI Ripple scenario give some fruit. And the longest time, people said, Chainlink would do better in the Japanese market space when essentially SBI Holdings, no criticized towards Chainlink in whatsoever. Chainlink is a great project, but there are certain people still to this day pushing Chainlink as the better project to XRP, which makes zero sense when it comes to financial assets. I mean, as I said, previously before, it's like comparing a Bugatti Veyron or a Bugatti Tourbillon now to a scooter. Honestly, nothing compares to the XRP Ledger when it comes to finance. There's no comparison. And real world assets is just a subcategory in the financial sector as well. But it shows you that the SBI Holdings and Ripple scenario is finally showing some progress, and also that other countries are taking note because Dubai pretty much straight away announced they're also going to be using XRP Ledger for tokenization, and they're starting with $5 million, whereas SBI Holding is starting with $66 million. On that note, we have also reached the endings of tonight's live. This was the CMF Live, stands for Crypto Mass Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m., long time onwards. For the most recent news regarding cryptocurrency, CBDCs, AI politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. Disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this was episode 446 of the CMF Live Show. Drop a like if you already haven't. If you watch us on YouTube, drop a like, and if you want, put a comment outside the live as well. If you watch us on X, drop a like, retweet. I've made the post and I pinned it on my essentially profile on X. If you have already liked and retweeted, thank you so much to every single one of you. CMF members, if you haven't liked or retweet, like and retweet. Also, if you followed and subscribed during this live as well, welcome to CMF Live. Before we do go, obviously, let's go start the comment section and we will call it a night. And I'll see everybody tomorrow, same time as usual. Let's see where we were at. $66 million, not 66.6. Thanks, Miles. Hey there, Miles. Good night. Yeah, good to see you as well. Good night. Thanks, Miles, for your insights as usual. Let's go, Shelly. See you tomorrow, same time as usual, Shelly. Great live, Miles. Have a great night and see you tomorrow, same time. Artistic, let's go. See you tomorrow, same time as usual as well. Thanks, Miles. Good night, all. Let's go, Stormy. See you tomorrow, same time as usual as well. Good night, Miles and CMF family. See you guys tomorrow night. Let's go, Funky. See you tomorrow, same time as usual. Have a good night. Thanks. Let's go. See you tomorrow, same time as usual. Free and forever. Good night, Miles. CMF, great news. Thanks, Miles. See you tomorrow. Let's go, free and forever. See you tomorrow, same time as usual. Awesome live. Take care, Miles and CMF. Let's go, Ray. See you tomorrow, but at the same time as usual. Thank you, Miles. Let's go, Funky. See you tomorrow, same time as usual as well. Thanks, Miles, for the great live evening. See you tomorrow, buddy. Let's go, Addy. See you tomorrow, same time as usual. Loads of great news and updates. Thank you so much, Miles, and have a lovely night. All. Let's go, Lena. See you tomorrow, same time as usual as well. Thank you, Miles, for a great show. Let's go, Joe. See you tomorrow, same time as usual as well. LMHP Pay launches public testing for payment-focused blockchain opinion. Good that they're doing that, and I hope it goes really well for them. Okay, we have reached the endings of tonight's live. I will see everybody tomorrow, same timing as usual, 10 p.m. London time onwards for the next episode of CMF Live Show, which is tomorrow, episode 447. See everybody tomorrow, same time as usual. Everyone have a great day or a good night, depending on where you're around the world. Love you all. Like, follow, retweet, share, subscribe if you haven't. If you have, thank you so much. Love you all. See you all tomorrow, same time as usual.